Hi. We're going to move straight on to the next panel discussion. The next panel discussion speaks directly to the theme of the conference, and it's got a title, The Smart Money for African Real Estate, looking at the different new ways and innovative ways of funding, current methods of funding, and we've got an esteemed panel, so I'd like to invite them. We've got Narman Gedda, Executive, Renovatio Capital Brazil, as the moderator. Warren van der Merwe, Managing Partner, Vantage Mezzanine. Maurice Madiba, Chief Executive Officer, Cloud Atlas. Craig Smith, Head of Research and Property, Anchor Stockbrokers. Linda Dotwane, Portfolio Manager, TUHF. May they please take their seats on the panel. Thank you.
Thank you very much, Kufia. Well, I have the difficult job of moderating the graveyard shift in a very cold room. So bear with us. Like you, we are motivated to keep it very relevant. As you've heard, my name is Narman Gedda. I work with Renovatio Capital, dealing with the African business. With me today is an esteemed panel. What I'll do is I will just ask them to introduce themselves fairly quickly in terms of the organizations that they work for. Of course, their biographies are in your programs. So if you really want to know who their employers and current and former employers are, you can always check that out. But if gentlemen, if you can just introduce yourselves in terms of the companies and what you deal with, and then we can take it from there.
I'm Craig Smith from Anchor Stockbrokers. I head up their property research function. We are a stockbroker and we cover the listed property sector in South Africa. In my previous role or previous job, I was at Jones Lang LaSalle, JLL, focused on the sub-Saharan African capital markets.
Hi there, Warren van der Merwe, Vantage Mezzanine. Not working. 1, 2, 3, 4.
Check.
1, 2. Okay. Warren van der Merwe, Vantage Mezzanine. And what we are is we are Pan-African Mezzanine Debt Fund, and we don't specifically specialize in property, but we do a lot of property transactions because mezzanine debt seems to fit well with the property asset class.
Hi, my name is Linda Dotwana. I work for TAF. We are a residential property financier exclusively in the CBDs. All the inner cities that require regeneration, that's where you would find us. Thank you.
Thanks. Hi, my name is Maurice Madiba. I work for Cloud Atlas Investing. And what we do is we look at listed property companies across the African continent and we basket them, and we've listed Africa Property Real Estate Fund a few months ago.
Okay, thank you very much, gentlemen. One unique thing about the session that we have here today is that we are dealing with subject matter that is not necessarily common to everybody in the conference. And so I just want from a point of departure to just have everyone on a level ground by way of definition so that they sort of understand what it is that we're going to be speaking about today. So for example, I'd just like to ask from my panelists if we could give us a definition of what securitization is. I mean, it features in the program. I don't know if anyone wants to take that. What is securitization? Craig, Warren.
I can start.
Okay.
So in our world, it's because we operate in the listed environment. For us, the security is actually shares in a company. Because now we've got this property ETF. If you do a look through to it, what the underlying asset is these buildings that the likes of Grit would have and companies across Africa. So for us, when we do securitization, some would use it to raise funding. For us, what we then do is make these buildings more accessible by dividing up the shares so people can hold individual units in whatever sizes they choose.
Okay, great. And then what about REITs? We keep hearing about real estate investment trusts. Craig.
So I'll maybe take that one. So I mean, REITs would essentially be listed on a stock exchange in South Africa and in most markets. In the US, you do actually have unlisted and listed REITs. It's effectively a pool of real estate assets which are essentially securitized. So an individual owner of the REIT gets exposure to the company which owns a basket of assets. So it's really a way to get access to properties, typically an illiquid asset class on the direct side. So it's a way to create liquidity in the underlying.
Okay, Linda, care to share with us what regeneration is?
So I think the history of CBDs the entire world over, at some point or the other, the CBD would go through a slump, and it's also commonly referred to as this phenomenon of inner city decay. And once this phenomenon of inner city decay sets in, what you then have is a flight of capital away from the traditional CBD to newish areas. And what then gets left behind would be all this existing infrastructure. And you then, what you also then find is that your traditional financiers would not have appetite to finance in those areas. And I think you would also hear of terms such as redlining, which effectively means that they do not have an appetite to fund in those areas, and there will be a total loss of confidence. And this TAF was then formed against that background to try and regenerate those areas. And if you think about it, if you look at the Johannesburg CBD, those who are familiar with the Johannesburg CBD, there are very few new properties that have come up. So what we have done is to finance existing residential properties within the Johannesburg CBD, and also some properties that would be candidates for conversion. This is where now you then be changing the functional usage of a property from to another, say from offices to residential or light industrial to residential. So that has now regenerated the CBD. So perhaps quick example that I can give, there is an area called Maboneng. So that would be a classical example of an area that was otherwise neglected and fallen into a complete state of disrepair that has now since been regenerated.
Thank you, Linda. And then, Warren, you mentioned mezzanine. So maybe you can help us by defining what mezz funding actually is.
Sure. 1, 2. So mezzanine is, if you know, in a shopping center or in a building, you get the mezzanine floor. It's typically between the ground floor and the first floor. And what it means is in the middle. So mezzanine debt is a type of debt, an instrument that sits or ranks behind bank debt, but ahead of equity. And very often when a company or a property development is looking to raise capital, if they have tapped out on their bank facilities or they're not able to raise bank funding, mezzanine can be a good alternative to equity funding. So yes, it's a debt instrument, and it has features of both debt and equity. It has an interest rate, but it also participates to some extent in the equity value of the borrower.
Okay, thanks, Warren. My next question was actually going to be, and I think you've spoken to it, the standard funding model for real estate when a property summits here. So the standard funding model is typically cash equity, and then you raise debt from the bank. What other forms of funding have you gentlemen interacted with other than those two specific sorts of funding? Now, obviously, Warren has spoken about mezzanine funding, but across the panel, are there any other ways, any other forms of financing that people could explore in the market today?
think in my world, it has really just been the two forms, which would be debt financing and also equity. But because equity is, in the majority of instances, a constraint, we have come up with creative ways of assisting some of our clients who are equity constrained.
So, I mean, I think the reality is that, you know, it's a variation of an equity or a debt instrument. I mean, my view would be that if you want deep liquid markets, you know, you would hope in time that a number of the African economies would have REITs. I know there are one or two countries on the continent outside of South Africa which have got formal REIT legislation and REITs, but I think just by way of the South African experience, it's certainly been you know, extremely favorable for the South African property sector, you know, with the adoption of REIT legislation, and prior to that there was a dispensation which was REIT-like from probably around the mid-80s through the property unit trust structure. So I think that's been a massive catalyst for the growth in the property sector in South Africa, and I think, you know, tapping into the, you know, the potential of REITs throughout the continent definitely has, you know, has the potential for a lot of benefit to grow those property markets. I think the key criteria, just talking again with reference to the South African experience, is that you know, started from a starting point where your local pension funds and your local capital markets was really the first adopter to, you know, invest and grow the property sector. Whereas I think in a number of economies and countries in the rest of Africa, I think a lot of projects are overly reliant on external capital sources. So I think there is probably, you know, a fair amount of work to be done in terms of growing, you know, local capital markets in a number of African countries as a way to grow their property economy.
Okay, Maurice?
If I look at it from our perspective, you know, Africa is still a little bit, the rest of Africa, away from adopting REITs for a few reasons. One of them I would mention is that government's your biggest builder and owner of properties in some of these markets. So when you look at state pension funds and pension fund portfolios across the continent, a lot of it is invested in the direct property. So you're finding that people are building and there's not a lot of occupancy, and it's an equity-driven sort of investment strategy, but it's not yielding the returns. Debt in the rest of Africa is extremely expensive. You know, so when you look at that combination, I guess you could give your experiences, but I would think that we're still a way off. And if you're looking for smart new ways, the best thing is to tap into collective pools. Traditionally, property has been tapped into the institutional market, which is great. But I think everybody in the room here wouldn't be able to afford a building on their own. I don't know. I'm not throwing out assertions, but a building on its own, to buy it would be difficult for an individual. But when you start to cluster that and you look at collective pools of people contributing towards new developments or potentially contributing towards buying a building, very similar to the structure that Maboneng would have adopted when they set up, pooling people together to then acquire these assets and fund refurbishment of the city or fund a greenfields project is really where the future, I think, is going in Africa. We do have this notion of being in community, and I think if we deliver property projects through new technology and legislation starts to allow this, that you would see people picking it up and that being a new captive source of funding.
Okay, moving on to something slightly different. We've seen a lot of interest in attempting to solve the problems on the African continent that are quite glaringly obvious. So one of the focus areas has been, for example, affordable housing, and another has been creation of income streams, focusing a lot on the disadvantaged or the lower income groups. Question I have for you is, in terms of these other different alternative sources of finance, what are the strategies, maybe if any of your organizations have interacted with this, that they've adopted to sort of try and solve some of these problems? So for example, you have housing issues, you have maybe sources of employment, maybe creating commercial opportunities, retail opportunities. Have any of your organizations interacted with this in terms of the sorts of funding models that you utilize? And if so, maybe what are your experiences in those areas?
Maybe not specifically on those points. I don't know why my mic always has a problem. Can you please make sure my mic is working? 1, 2, 1, 2. Okay. Maybe not specifically on those points, but I just don't get it. No matter which mic I use, it doesn't work. 1, 2. Okay. So I just want to give you some practical examples of how mezzanine can be used in property financing. Firstly, one of the things that we do is we would always look to do something that a bank wouldn't do. So try and play in a special situation where banks are not active, because they have their role and they provide financing in certain instances. So one example is pre-development costs or infrastructure that needs to be in place before banks come into a development and fund. So what we've done before is we've used mezzanine to fund those pre-development costs or that infrastructure, and we've done that based on property assets that the developer can pledge to us as security. And so examples would be in South Africa, in Nigeria, and in Mauritius, we have funded mixed-use developments that way. Another example would be to fund buildings that are not fully tenanted. So banks, again, typically they want something that's fully tenanted. We would come in and say, we'll provide mezzanine to give you room to fully tenant the building or the mall, because senior bank debt requires that you service interest all the time and that you pay down capital, and that's very onerous on buildings that are not fully tenanted. So we'll allow interest to roll up, we'll allow a bullet. In other words, you pay the capital at the end. And so we for example, funded a building in South Africa and a mall in Lagos and one in Nairobi on that basis. And then another example, just to mention, because these are just practical examples, is if a group has various properties that themselves are geared, so you've got debt against all of those, but now the group wants to build another hotel or another building, we could use mezzanine to fund against the equity value in those properties. In other words, the value that sits after the bank debt, and then that money can be used to construct the building. So it's really trying to play where a bank wouldn't play, and as a substitute for equity.
Yeah, which is important, I suppose, because sometimes even when you're talking about these different building stocks, it's not every asset that is performing well enough for a bank to give consideration, as you've mentioned. Maurice, you had some thoughts as well?
No.
Oh, you did. Okay, great. I guess I just want to maybe come back to Craig. Maybe you can talk to us about REITs. I know you have a bit of REITs experience. What role do you think they can play moving forward in Africa in terms of how we can make better use of REITs? I know in South Africa there's been extensive utilization of REITs. Now we have in Nigeria as well some of that happening, and Kenya. Kenya has also launched it's actually one REIT at the moment. There's a distinction in Kenya. They distinguish between an investment REIT and a development REIT. So Kenya at the moment has one REIT by Stanley Fahari iREIT. But maybe, do you reckon that that's possibly another area we could begin to grow capital sources and liquidity from?
I mean, I would certainly think over time, I would certainly think over time that it would be an attractive source of capital. I think just coming back to Maurice's point with other alternative funding mechanisms, my view would be that it's going to come down to confidence and trust, and also, a lot of these alternative funding sources are still in their infancy, and I think yet to be proven en masse. And I think, what the REIT legislation or the REIT regime provides is a fairly standardized, regime for investors, and that does provide a level of confidence with the regulatory oversight and transparency and consistency across companies that you have an opportunity to invest in. So, my view would still be that, there is a role for REITs to play on the African continent. But again, REITs are only really attractive if, there's sufficient liquidity in the vehicle for investors. So, the whole sort of idea behind a REIT is obviously for the tax, the flow through of dividends to investors, and that investors get taxed at their own marginal tax rate. But I think separately it's to provide liquidity to an illiquid asset class. So I think if the capital markets aren't at a level where you're providing liquidity to investors, it's going to be very difficult to get traction. So I think hence the comment earlier around the capital markets, the local capital markets, seeing real estate and real estate investment trusts as an appropriate component of their mixture of exposure to different asset classes. And I do think there is a role to play, from the pension fund industry. I think, there are mechanisms that you can utilize in terms of, creating opco structures and sale and leasebacks, where you can provide product. And unfortunately, the experience to date with some of the REITs that have come to market, unfortunately, hasn't provided sufficient liquidity. And I think also, there probably is a level of education that needs to take place in those, in certain instances as well, to gain that investor confidence and understanding.
Thanks, Craig. REITs began in 1960, and the conversation we had just this past week with the chairman of National American Real Estate Investment Trust is that they are still learning. 60 years on, they are actually still in the learning process. Maurice, maybe you can share with us some insights with respect to ETFs and what your experiences have been, and maybe other ways in which people could maybe plug into that as a strategy, form of funding, and maybe what could be done better to make that a more effective form of funding.
Sure. So what Craig was saying is right. You need a lot of market depth and liquidity in the rest of Africa to get things like REITs working, and I'm specifically referring to listed ones on the stock market. Our capital markets are shallow in that regard. So even when we constructed this index to look at property on the rest of the African continent, we were glad to get to the number that we have, which is about 13 stocks, but the universe is very narrow. It's less than 25 stocks. So where you have companies like Grit and the like, where they've got multi-jurisdiction in terms of their portfolio, for us as an ETF player, that's really good, because what they can effectively do is in each market, they could formulate or list a REIT, which we would love to pick up as an ETF issuer. So ETFs do play a critical role, but what they do is just provide the secondary market liquidity for investors to be able to get into and get out of and build a position. So it's a numbers game. It needs a lot of people, it needs a lot of daily trading, and it needs the African population to really come to the fore and start to pick it up. In essence, what then the ETF does, because most ETFs are backed up by a unit trust or collective investment scheme, so it offers you the tax efficiency of a REIT, even though you might not be directly invested in a REIT company. So you've got that benefit. You've got then regular distributions, which people would also expect from a REIT, although that distribution is based on the distribution of the underlying company. So really looking through the company is important. And then what you would look for is a good management team, because then your buildings are being run fairly well. And because we're looking at rest of Africa and we look at more than one market, what tends to give us comfort when we include companies in the index is, the level of the lease, the occupancy of their buildings, the yields that they're getting. Is it hard currency or is it local currency? How easy is it to get that money out? Because the trickle effect is then being able to pay a dividend and a distribution out to your investors on a regular basis.
Okay, thank you. And as I had promised, I'm an African who keeps time. and I wasn't going to keep you long. So maybe I'll just turn to the floor in case there are any questions for any of the panelists. I don't know if there are any questions. Anyone? I want to assume that you did such a good job that everything was well understood, or that nothing was understood at all. Anyway,
I think we do have 15 minutes left.
yes, we
Hannah.
do. So I was going to come back to you.
You're going
too.
to come back.
Yeah.
I mean, we could talk about some other forms of funding, like SPACs, for example.
Oh yes, special purpose acquisition companies.
Yeah, so my take on SPACs, I think there are about 6 or 8 in the South African market at the moment on the JSE. And I'm not sure, maybe the panelists know better than me, but I don't think any of them are property related. So a SPAC is quite an interesting way of raising equity very quickly in the listed markets for potential acquisition. And the jury's out on these SPACs because they haven't really delivered for investors. In fact, a couple of these SPACs have actually had to hand their money back to investors. You seem to have a good one. Let me try your one. So a couple of these SPACs have handed money back. So the thing is, you raise money up front, and then you use that money to acquire future acquisitions. And what I would say in the property space is, or in any space, it only makes sense if you can raise a lot of capital, a reasonable amount of capital. And the only way to raise a reasonable amount of capital is to have really well-known deal makers sponsoring the SPAC. Because the investors are actually backing the deal maker, not the underlying asset, because at the time you raise the capital, you don't yet have investment. And so if you've got a good, strong pipeline of property investments and well-known deal makers, you can raise a good piece of capital. But if you can't, to be in a small, illiquid, listed vehicle is one of the worst spaces to be. And I would say investors are very skeptical at this point about SPACs, but it still is an option for raising equity very quickly.
Yes, just for the benefit of the floor, when you talk about SPACs, it's a special purpose acquisition companies, where basically you raise money for the purpose, like a reverse listing, if I could say that, where you raise money to acquire a company, and then basically it's a cheaper way, I would suppose, of doing a less complicated way of doing an IPO, rather than going through the complex initial public offering regime, where you have to go through different regulatory hurdles. Some investors opt to go the SPAC route, so that then you can have that option. Okay, I think maybe coming back to the panel, other than the SPAC option and the ETFs and the REITs, what are the other funding options that maybe you may have interacted with that are not really boilerplate or not really conventional, that might be worth interest pursuing? I'll ask the stockbrokers if you've had any.
I think my panelists are probably better equipped than me. I mean, in the REIT space, it's generally pretty vanilla. It's senior debt. Typically these companies have got low gearing levels, LTVs, approximately 30 to 40%. So the majority of that debt for the bulk of companies would be senior debt funding. They've obviously also tapped into the bond market as well as an alternative source of funding. But I think in terms of the more exotic type of funding regimes, I would imagine Warren and Maurice, you guys may be better placed than me.
Okay.
I was actually going to suggest Linda.
Yes, Linda. Everyone seems to be looking to you.
I think from our perspective, we play in the mortgage financing space, and there's only some elements of creativity that we then introduce, and we look at it through the lens of commercial property financing. So from a loan term point of view, it's a 15-year term, and as I mentioned earlier, that there are clients who are equity constrained, who have brilliant ideas, who have brilliant schemes that they would like to pursue, and the only constraining factor would then be the equity. So, there is an equity assistance instrument that we've come up with to alleviate that difficulty. So, but it's the good old mortgage loan financing.
Okay. Just before.
add,
Oh yes, Warren. Before we go to the floor for the questions.
So just a few more other ideas. I mean, one is you guys get the Soundman Award for the year here. So the other ones I can think of is like sale and leaseback. Now, for example, to my understanding, and particularly if you could do a local currency sale and leaseback on a property, that would be very beneficial in unlocking value from existing properties, and you can use that funding elsewhere for other developments. But take, for example, a place like Nigeria. To my understanding, there have not been any property sale and leasebacks in that market, which is crazy. And so if you could do, start to develop that line of funding, sale and leaseback against a local lease, local currency lease, I think that's a great way of raising funding. We thought of raising a senior debt fund for real estate a little while ago. And interestingly, although there's so much opportunity, I mean, you speak to so many developers out there, people who play in the property space, they're like, yes, any alternative to the banks will be fantastic. You can maybe push the LTVs a bit more, you can be a bit more flexible. But the problem there is that there's not a lot of investor demand for such a fund. And some of the reasons are that actually the yields that you'd get on your debt are not attractive enough relative to developed markets to actually attract those investors in. And then again, you're still looking at dollar funding. So you're not going to have local currency to lend, which is always a big problem. So that's not here yet, but maybe somebody will start to develop senior debt funds like you see in other industries. It's a massive thing, for example, in Europe and the US. And there are some private debt funds in Africa, but just one or two. We spoke about corporate bonds. Another amazing way of raising funding for property exists in Mauritius, and it's called VEFA. And it's a type of funding that exists in their legal framework. It goes back to French law, where you can actually fund the development of units, residential units, through progress payments. And it's like the best sort of funding scheme that I've seen, where a developer can actually completely self-fund a development via these project payments. But I've only ever seen that in Mauritius. So there are pretty limited funding opportunities, but there are some interesting ones that are emerging, like the SPACs, like mezzanine debt, but still, I think, pretty slim offerings. And maybe the last one to mention is DFIs, Development Finance Institutions. I think they always play a big role. They don't always like real estate, but I think they definitely should be on the radar of anyone looking to raise money.
Okay, in fact, I was about to ask you, Aaron, how you compete with the commercial banks in terms of senior debt lending, but I think you've answered my question. You can push the LTVs, and you can be a bit more flexible in terms of what you're offering the clients. There was a question right here.
Thank you very much. Thank you very much for the opportunity. I'm Donald Solani from Kimberley, Northern Cape. I just wanted to find out, or let me start by saying that I'm an owner of an emerging company. I wanted to find out which type of funding should one be looking for if you have identified an opportunity in student housing, for example, because in Kimberley, Northern Cape, we are now confronted with a unique opportunity of a university that has just been built there So now the immediate demand is with your student housing. So I wanted to find out where can we raise, funding for projects like that. And secondly, I noted on the brochure that there is a session that is going to deal with hotel financing. But I just thought that I could also just ask the panel which financiers can one be speaking to if you want to start a hotel from scratch. Thank you.
Okay. I don't know who would like to take that one. Linda?
We do finance, as TAF, we do finance student accommodation. But we always tread very carefully when we are dealing with student accommodation, because you would only then be exposing yourself to a single sector of the market. And that creates what we call a concentration risk. So you're only servicing the student market, nobody else. It's unlike if you were to be dealing with normal residential accommodation, for rental purposes, because the pool of tenants that you'll be, or rather the pool that you'll be sourcing your tenants from, will be employed in a multi-sector economy. So the probability of all those employers in whose employ your tenants are failing, at least at the same time, is reduced significantly.
Okay, great. I guess I just want to maybe come back to Craig. Maybe you can talk to us about REITs. I know you have a bit of REITs experience. What role do you think they can play moving forward in Africa in terms of how we can make better use of REITs? I know in South Africa there's been extensive utilization of REITs. Now we have in Nigeria as well some of that happening, and Kenya. Kenya has also launched actually one REIT at the moment. There's a distinction in Kenya. They distinguish between an investment REIT and a development REIT. So Kenya at the moment has one REIT by Stanley Fahari REIT. But maybe, do you reckon that that's possibly another area we could begin to grow capital sources and liquidity from?
I would certainly think over time.
I would certainly think over time that it would be an attractive source of capital. I think just coming back to Maurice's point with other alternative funding mechanisms, my view would be that it's going to come down to confidence and trust, and also a lot of these alternative funding sources are still in their infancy, and I think yet to be proven en masse. And I think what the REIT legislation or the REIT regime provides is a fairly standardized regime for investors, and that does provide a level of confidence with the regulatory oversight and transparency and consistency across companies that you have an opportunity to invest in. So, my view would still be that there is a role for REITs to play on the African continent. But again, REITs are only really attractive if there's sufficient liquidity in the vehicle for investors. So the whole sort of idea behind a REIT is obviously for the tax, the flow through of dividends to investors, and then investors get taxed at their own marginal tax rate. But I think separately it's to provide liquidity to an illiquid asset class. So I think if the capital markets aren't at a level where you're providing liquidity to investors, it's going to be very difficult to get traction. So I think hence the comment earlier around the capital markets, the local capital markets, seeing real estate and real estate investment trusts as an appropriate component of their mixture of exposure to different asset classes. And I do think there is a role to play, from the pension fund industry. I think, there are mechanisms that you can utilize in terms of, creating opco structures and sale and leasebacks, where you can provide product. And unfortunately, the experience to date with some of the REITs that have come to market unfortunately hasn't provided sufficient liquidity, and I think also there probably is a level of education that needs to take place in those, in certain instances as well, to gain that investor confidence and understanding.
Thanks, Craig. I mean, REITs began in 1960, and the conversation we had just this past week with the chairman of National American Real Estate Investment Trust is that they are still learning. 60 years on, they are actually still in the learning process. Maurice, maybe you can share with us some insights with respect to ETFs and what your experiences have been, and maybe other ways in which people could maybe plug into that as a strategy, form of funding, and maybe what could be done better to make that a more effective form of funding.
Sure. So what Craig was saying is right. You need a lot of market depth and liquidity in the rest of Africa to get things like REITs working, and I'm specifically referring to listed ones on the stock market. Our capital markets are shallow in that regard. So even when we constructed this index to look at property on the rest of the African continent, we were glad to get to the number that we have, which is about 13 stocks, but the universe is very narrow. It's less than 25 stocks. So where you have companies like Grit and the like, where they've got multi-jurisdiction in terms of their portfolio, for us as an ETF holder, that's really good, because what they can effectively do is in each market they could formulate or list a REIT, which we would love to pick up as an ETF issuer. So ETFs do play a critical role, but what they do is just provide the secondary market liquidity for investors to be able to get into and get out of and build a position. So it's a numbers game. It needs a lot of people, it needs a lot of daily trading, and it needs the African population to really come to the fore and start to pick it up. In essence, what then the ETF does, because most ETFs are backed up by a unit trust or collective investment scheme, so it offers you the tax efficiency of a REIT, even though you might not be directly invested in a REIT company. So you've got that benefit. You've got then regular distributions, which people would also expect from a REIT, although that distribution is based on the distribution of the underlying company. So really looking through the company is important. And then what you would look for is a good management team, because then your buildings are being run fairly well. And because we're looking at the rest of Africa and we look at more than one market, what tends to give us comfort when we include companies in the index is, the level of the lease, the occupancy of their buildings, the yields that they're getting. Is it hard currency or is it local currency? How easy is it to get that money out? Because the trickle effect is then being able to pay a dividend and a distribution out to your investors on a regular basis.
Okay, thank you. And as I had promised, I'm an African who keeps time, and I wasn't going to keep you long. So maybe I'll just turn to the floor in case there are any questions for any of the panelists. I don't know if there are any questions. Anyone? I want to assume that you did such a good job that everything was well understood, or that nothing was understood at all. Anyway,
I think we do have 15 minutes left.
Yes, we do. So I was going to come back to you.
You're going to come back.
Yeah.
I mean, we could talk about some other forms of funding, like SPACs, for example.
Oh yes, special purpose acquisition companies.
Yeah. So my take on SPACs, I think there are about 6 or 8 in the South African market at the moment on the JSE. And I'm not sure, maybe the panelists know better than me, but I don't think any of them are property related. So a SPAC is quite an interesting way of raising equity very quickly in the listed markets for potential acquisition. And the jury's out on these SPACs because they haven't really delivered for investors. In fact, a couple of these SPACs have actually had to hand their money back to investors. You seem to have a good one. Let me try your one. So a couple of these SPACs have handed money back. So the thing is, you raise money up front and then you use that money to acquire future acquisitions. And what I would say in the property space is, or in any space, it only makes sense if you can raise a lot of capital, a reasonable amount of capital. And the only way to raise a reasonable amount of capital is to have really well-known deal makers sponsoring the SPAC. Because the investors are actually backing the deal maker, not the underlying asset, because at the time you raise the capital, you don't yet have investments. And so if you've got a good, strong pipeline of property investments and well-known deal makers, you can raise a good piece of capital. But if you can't, to be in a small, illiquid, listed vehicle is one of the worst spaces to be. And I would say investors are very skeptical at this point about SPACs, but it still is an option for raising equity very quickly.
Yes, just for the benefit of the floor, we're talking about SPACs as a special purpose acquisition companies, where basically you raise money for the purpose, like a reverse listing, if I could say that, where you raise money to acquire a company, and then basically it's a cheaper way, I suppose, of doing a less complicated way of doing an IPO, rather than going through the complex initial public offering regime, where you have to go through different regulatory hurdles. Some investors opt to go the SPAC route, so that then you can have that option. Okay, I think maybe coming back to the panel, other than the SPAC option and the ETFs and the REITs, what are the other funding options that maybe you may have interacted with that are not really boilerplate or not really conventional, that might be worth interest pursuing? I'll ask the stockbrokers if you had any.
I think my panelists are probably better equipped than me. I mean, in the REIT space, it's generally pretty vanilla. It's senior debt. Typically these companies have got low gearing levels and LTVs approximately 30 to 40%. So the majority of that debt for the bulk of companies would be senior debt funding. They've obviously also tapped into the bond market as well as an alternative source of funding. But I think in terms of the more exotic type of funding regimes, I imagine Warren and Maurice, you guys may be better placed than me.
Okay. Yes, Linda. Everyone seems to be looking to you.
I think from our perspective, we play in the mortgage financing space, and there's only some elements of creativity that we then introduce, and we look at it through the lens of commercial property financing. So from a long-term point of view, it's a 15-year term, and as I mentioned earlier, that there are clients who are equity constrained, who have brilliant ideas, who have brilliant schemes that they would like to pursue, and the only constraining factor would then be the equity. So, there is an equity assistance instrument that we've come up with to alleviate that difficulty. So, but it's the good old mortgage loan financing.
Okay, before we go to the floor for the questions.
So just a few more other ideas. I mean, one is you guys get the Soundman Award for the year, yeah? So the other ones I can think of is like sale and leaseback. Now, for example, to my understanding, and particularly if you could do a local currency sale and leaseback on a property, that would be very beneficial in unlocking value from existing properties, and then you can use that funding elsewhere for other developments. But take, for example, a place like Nigeria. To my understanding, there have not been any property sale and leasebacks in that market, which is crazy. And so if you could do, start to develop that line of funding, sale and leaseback against a local lease, local currency lease, I think that's a great way of raising funding. We thought of raising a senior debt fund for real estate a little while ago. And interestingly, although there's so much opportunity, I mean, you speak to so many developers out there, people who play in the property space, they're like, yes, any alternative to the banks will be fantastic. You know, you can maybe push the LTVs a bit more, you can be a bit more flexible. But the problem there is that there's not a lot of investor demand for such a fund. And some of the reasons are that actually the yields that you'd get on your debt are not attractive enough relative to developed markets to actually attract those investors in. And then again, you're still looking at dollar funding, so you're not going to have local currency to lend, which is always a big problem. So that's not here yet, but maybe somebody will start to develop senior debt funds like you see in other industries. It's a massive thing, for example, in Europe and the US, and there are some private debt funds in Africa, but just one or two. We spoke about corporate bonds. Another amazing way of raising funding for property exists in Mauritius, and it's called VEFA, and it's a type of funding that exists in their legal framework. It goes back to French law, where you can actually fund the development of units, residential units, through progress payments. And it's like the best sort of funding scheme that I've seen, where a developer can actually completely self-fund a development via these project payments. But I've only ever seen that in Mauritius. So there are pretty limited funding opportunities, but there are some interesting ones that are emerging, like the SPACs, like mezzanine debt, but still, I think, pretty slim offerings. And maybe the last one to mention is DFIs, Development Finance Institutions. I think they always play a big role. They don't always like real estate, but I think they definitely should be on the radar of anyone looking to raise money.
Okay, but I was about to ask you, Aaron, how you compete with the commercial banks in terms of senior debt lending. But I think you've answered my question. You can push the LTVs and you can be a bit more flexible in terms of what you're offering the clients. There was a question, right? Yeah.
Thank you very much. Thank you very much for the opportunity. I'm Donald Solani from Kimberley, Northern Cape. I just wanted to find out, or let me start by saying that I'm the owner of an emerging company. I wanted to find out which type of funding should one be looking for if you have identified an opportunity in student housing, for example, because in Kimberley, Northern Cape, we are now confronted with a unique opportunity of a university that has just been built there. So now the immediate demand is with your student housing. So I wanted to find out where can we raise, funding for projects like that. And secondly, I noted on the brochure that there is a session that is going to deal with hotel financing. But I just thought that I could also just ask the panel which financiers can one be speaking to if you want to start a hotel from scratch. Thank you.
Okay. I don't know who would like to take that one. Linda?
We do finance staff, we do finance student accommodation, but we always tread very carefully when we're dealing with student accommodation, because you would only then be exposing yourself to a single sector of the market, and that creates what we call the concentration risk. So you're only servicing the student market, nobody else. It's unlike if you were to be dealing with normal residential accommodation, for rental purposes, because the pool of tenants that you'll be, or rather the pool that you'll be sourcing the tenants from, will be employed in a multi-sector economy. So the probability of all those employers in whose employ your tenants are failing at least at the same time is reduced significantly. And I think also the other factor that has also then thrown a spanner in the works in as far as student accommodation funding is concerned is the NEFSAS factor. You know, big NEFSAS is oversubscribed.